Mike, hang on, because I want to bring in our Bloomberg best, Hugh Johnson. He's the chairman and chief investment officer of Hugh Johnson Advisors. Johnson oversees almost $2 billion in assets. Hugh, great to have you back on the program. I think Mike did a great job outlining sort of what the jobs claims show. But, you know, overall, do you agree that the fact that they're stuck here above 400,000 is not good for the economy or the jobs market?
Yeah, Betty, I think he's basically got it right. The economy is obviously the real question being, has it just hit a soft patch? Is the soft patch largely because of a slowdown in manufacturing? There's a lot of evidence that shows that it's maybe due to supply disruptions from Japan, and it's just the manufacturing sector of the economy. But clearly, the economy has, I think, hit a soft patch. The other outcome that could be possible is the end of the cycle. I think, quite frankly, that's not the right conclusion to reach. I think it's just a soft patch, and I think it's primarily manufacturing. In other words, I think Mike basically has it right.
Hugh, the one question a lot of people are raising, though, is this related to the spike in oil prices, and oil prices have leveled off, but they're still elevated. Companies afraid that consumers are going to cut back on their spending, so they're cutting back on production and the employees needed to make them.
Yeah, you know, Mike, it's hard to carve out. There's a lot of risks that face us. It's hard to identify what really this is all about. I think certainly the rise in oil prices that we saw beginning back in February is part of the story. I think a bigger part of the story is what's happened in Japan, the supply disruptions. You can see that clearly hitting manufacturing generally, but automobile manufacturing, you saw that in the automobile sales data that Betty referred to. So my guess is that this is primarily Japan. And then there's a lot of other things going on in this world of ours. There's a shift towards fiscal restraint or even austerity in Europe. You worry about that. A shift towards monetary restraint in China. You worry about that. So there are plenty of things or reasons why you can say we've hit a soft patch in the U.S. economy generally. But again, I think it's probably more manufacturing than the broader-based economy.
And then, Hugh, even though there's all these uncertainties you just outlined, though, would you be decisive about buying here in the stock markets on the dips?
Yeah, I'm a little reluctant to do that. Let's just say I'm dragging my feet on that. What I'd like to see, Betty, to be honest with you, is this is obviously a correction. I think it's a correction in an ongoing bull market. I think there's opportunities that are showing up, and people should take advantage of the opportunities. But I'd like to see the stock market start to stabilize and show a little bit better performance, particularly when I look at the performance of sectors. We've seen a big shift towards defensive sectors since February. And what I'd like to see is a shift back to bull market sectors. I'd like to see small capitalization stocks come back, and I'd like to see better performance from the stock market itself. I want to buy, but I'm not quite ready to do it yet.
Well, the stock market, Hugh, is the one big difference from last year. Rolled over last year and went down. This year's risen through all of this bad news. Is that going to continue, or are we at a tipping point now?
Well, who knows? But I think, when you have corrections in ongoing bull markets, they can be between 5 and 10%. This one hasn't been that big yet. I think it could be as much as 5 to 8%. That's just a guess. But I still think it's just a correction in an ongoing bull market. Let's keep in mind, though, that the market has been struggling since the middle of February. So this correction has been a sort of ongoing shift towards defense by investors. In other words, investors have seen this slowdown coming, and they've been sending that signal since the middle of February. It might get a little worse before it gets better.
Yeah.
And then I think it's an opportunity to buy.
It does seem as if it has been building up to this point. Hugh, thank you. Hugh Johnson, a Bloomberg best of Hugh Johnson Advisors.